Welcome back, and joining me with more insight on the day's trade is Cremen from AdviceWorx. Thank you so much for your time, Caroline. I've been watching the rand like a hawk, and it quickly crossed that 18 rand level against the US dollar in morning trade. I think at some point it was at around 18 rand 10, but now it's back at around 17 rand 94 against the greenback. What's changed?
Look, I think it's just there is a bit of uncertainty in the world at the moment. There are obviously issues in the Middle East, and we're very dependent as a country on for inflation, for our economy, for what that oil price is. So I can only assume that there's probably a little bit of worry around that, about a potential risk off trade, moves out of emerging markets. So we just don't know where we stand at the moment, and I think our currency is just getting hit with that.
Yeah. All right. Well, something else that does affect our currency, of course, as you mentioned, the oil price is inflation. And we did have the May consumer inflation print coming out this morning, keeping steady at 2.8%. What did you make of that? And actually quite good, considering that it is below that 3% bottom range of the bottom point of the target range.
Yes, they look very, very healthy. And, if we hadn't had the issues that we have in the Middle East at the moment, one could probably certainly say that, you're looking at your interest rate decreases further in the year, despite the fact that that the Treasury would be moving their targets down. So there was this slightly higher food offset by a lower fuel price. Now, that's kind of important, because if the oil price kind of stays where it is, or it keeps on going up, and there's no increased production by OPEC, we may actually very well see that inflation print go higher.
And actually, going back now to April, not May, we did have more economic data coming out with the retail sales, and that climbed 5.1% year on year. Not surprising, considering that inflation in that month was also 2.8%. And maybe what are you thinking in terms of just retailers at this point?
Yeah, actually really healthy. That's one thing about South Africans. We do like to shop, and sort of textiles, clothing and footwear up 12.5% year on year. So that's way above inflation. There might be some aspect of that that's due to the two-part system. People had maybe a little bit more money in their pocket, but also probably a little bit more confidence, now that we've actually had, we've had a budget, and, the government of national unity seems to be settling down. At least the rhetoric seems to be settling down. So consumers have saved us. So quite a healthy print, considering where we are economically.
Yeah. All right. Well, we do have, of course, in terms of the inflation print and monetary policy, the Fed coming out with its interest rate decision this evening. What tone are you expecting from Fed Chair Jerome Powell?
Well, it's going to be interesting, because coming back to, I think everything was probably running smoothly for them, to say, look, we're still a little bit nervous about inflation, lower economic growth, and then you threw a Middle East crisis into the mix, and now you've potentially got a higher oil price. So I think one can pretty much assume that they're not going to be decreasing interest rates at this point. There is a potential adverse supply shock because of high oil. So I think what people will be looking at, because remember, these documents aren't done like within the week, they're kind of done a little bit before that. So maybe a lot of that would have been written, and the polling, especially on the dot plots, would have been done before you had the crisis in Iran and Israel. So I think what people would have been looking at is where the dot plot ends up. So are you going to have 2 interest rate decreases, or only 1? And if you have the 2, I think you will probably already, I think the market will take that in a stride. But if only 1 is being predicted or indicated by the dot plot, you may see a bit of a negative reaction, because it still doesn't, include the potential negative aspects of a higher oil price. So it's not going to please Donald Trump, because I think he said today that he would like the Fed to decrease interest rates by 2%, and he's probably not going to get anything tonight at all.
All right. Quickly, before we get to your stock pick, Caroline, Renergen came out with a quarterly update, and actually that share price took a beating, almost 6%. They were giving us some of the production highlights, but also this is, of course, amid the potential takeover by ASP Isotopes. Anything stand out for you there?
Yeah, look, I think the cash flows don't look particularly healthy. I mean, they needed 30 million facility from ASP Isotopes, apologies. And, they had a slight drop in LNG production, which doesn't help if you don't have a great cash flow.
Yeah.
So I think that was probably the reason the market reacted to it.
All right. Well, let's get to your stock pick for today. Caroline, where are you seeing value?
Okay, well, in an uncertain time, I'm going to go for an exchange-traded fund. The code is IQLT. It is the iShares MSCI International Quality Factor ETF. So it's a dollar-based fund, but it has only got holdings in developed markets, US. And this might be a nice place if because especially if the US dollar is actually looking a little bit weaker. So it's going to be blue chip. You've got companies from Hong Kong, UK, ASML, Nova, all of those big companies within this exchange-traded fund. So a potential way for people to diversify away from the US. Not that I'm negative about the US, but you should have pays to be diversified.
All right, lovely. Well, thank you so much for your time and for your insights on what has been moving investors' money today, Caroline. Really appreciate it. That was Caroline Cremen from AdviceWorx.